No one could actually tell me how the market worked and how investors could get the best benefit. I thought, well, I'm going to have to find this out for myself. I really don't know much about the property market at all. And I need to know you can actually predict the future. The market is predictable. Timing is far more accurate than what they call time in the market.
These 50 data points leads me to the question, how are property professionals outbidding themselves in certain markets and creating a boom?
Everyone tends to create the boom, which is a terrible thing because, if it's not a real boom, it will end up being a bust. And of course, people could lose money. Prices went from a couple of $100,000 up to over $1 million in a very short period of time. Within a few years, it had dropped to 100,000.
Do you think we'll ever have buyer's markets ever again?
I can't see it. I think it's overdue for a change.
Welcome to the Property Addicts Australia podcast. Today we are joined by John Lindeman, one of the most respected voices in property in Australia, former head of research at Residex, and long-time contributor to the Australian Property Investor magazine. John, welcome to Property Addicts Australia. It's great to have you today.
It's a pleasure being here, Mona and Sana. Thank you very much for inviting me. It's the first time I've been here, but I'm really looking forward to this session.
So, John, tell us a bit about your story, your background. Where do you come from and how you got into property?
Right. Well, as you can tell, I've been around a long time. But I started my property investing journey when I was only 20 years old. I bought my first property in Melbourne in Hawthorne and knew nothing about the market whatsoever, but we bought this little terrace house and decided to renovate. And after 4 years, we discovered it had doubled in value. And I thought, oh, gee, property investing, that's the way to go. And so we'll do it again. So we sold that property and bought another one around the Bayside area around Mentone. And thinking the same thing would happen again. And at the end of 4 years, we had to sell. And I discovered that we actually had made a loss. The market had turned the wrong way. Prices had gone down. And so I thought, well, I really don't know much about the property market at all. And I need to know. So I decided to write or read every book I could find on the property market and go to, podcasts and boot camps and free shows, whatever I could. And although I learned a lot, no one could actually tell me how the market worked and how investors could get the best benefit. I thought, well, I'm going to have to find this out for myself. So I finished my professional studies in statistics and in marketing, and I joined the Australian Bureau of Statistics, and that's where I learned all about trend analysis, which was a fascinating new topic to me, that you could actually predict the future. And the ABS was running seminars and charging a lot of money for people to go along and find out how to predict which way shares or commodities or gold was likely to move by looking at the trends. And I thought, well, if you can do that with commodities and gold and shares, why can't you do it with property? So that was really, the start of my quest to find out how you could do that.
And after that, you moved into your into Residex. What was that like? What did you end up developing there?
Well, I decided to put that knowledge to good use. I looked at the property market and I thought, well, it behaves like any other commodity, and according to the laws of supply and demand, and therefore you should be able to predict the future. Now, housing's a bit more complex because you've got owner occupiers, you've got investors, you've got renters, and you've got all different types of markets, but it still obeys the same rules. And so I studied the market for 5 years at Residex and then worked out how you could actually predict the future. I approached my boss and said, look, I think I've worked it all out. And he said, well, we're moving in different directions. So I left Residex and I started my own company. That was 2010, with the aim of not just working out how the market works, but developing a tool that investors could use, a database, to work out which areas are likely to go up in price and which areas are not likely to go up in price.
We'll come to that, the tools that you've developed, John. But what I'm keen to know is, like, what are the biggest lessons that you've learned over your journey? Obviously, there's been significant changes, right? from when you started versus how many tools there are, etc., out there?
Oh, yeah, there was hardly anything when I started. You mentioned I worked with API Magazine, and they published all the sales data in the back of the magazine, and that was really the only way you could get hold of data at suburb level. There's a lot more data available now, but I think the main things that I learnt was that one is that the market is predictable. It works to laws of demand and supply. And there are three main dynamics which we probably will talk about: people, purchasing power, and properties, that determine whether or not prices will go up or down. So it's predictable, and you can put that to good use as an investor. And I also, realised that not only is it predictable, but you can make predictions fairly accurately over a short period of time. So I realised that timing in the is far more accurate than what they call time in the market. And a lot of experts say, well, you have to invest for the long haul, 5, 10 years. And my belief is the opposite. And I said, no, you could do far better by buying for the maximum short-term gain, as long as you know where to do that and what to buy.
Absolutely, because different markets are rising at different points in time. So jumping in the right market at the right time can make a huge difference. Um, John, you spoke about the fact that there was very little data available historically. It was really at the back of the API magazine many years ago. And now, today, there's a lot more data available, and it's literally at everyone's fingertips these days online. So, what's your view of that? Obviously, it's good to get the data, in my view, but where could it lead to? What are the risks with that?
Probably the main risk is what they call analysis paralysis, which is there's just too much data, and everyone's claiming to be an expert, and they've all got. There's some people out there say we use 50 different data points, and I think, well, if you're using 50 data points, they're going to end up conflicting each other, and you just simply get confused, and you end up doing nothing at all. So I always say, look, even though there's so much data out there, all you really have to do is concentrate on the main indicators, and that is the indicators of supply, which is the number of properties listed for sale in any suburb, and demand, which is the number being sold. And tracking those will give you a pretty good idea as to which way markets are likely to move.
But these 50 data points leads me to the question that how are property professionals outbidding themselves in certain markets and creating a boom in those markets?
Well, a lot of them will, because of the advent of AI, there's a lot of commonality in the way predictions are generated, and so everyone tends to say, "Oh, Darwin's booming," and then all the data points to Darwin, because that's where people are buying, and so it becomes a sort of a self-fulfilling prediction. So a lot of that going on in the market, where the data is actually leading people down certain paths, and then they create the boom, which is a terrible thing, because if it's not a real boom, it will end up being a bust, and of course people could lose money.
So, how do you get around that?
Well, I guess the main thing is we've built a database, as I mentioned, in 2010, which analyses all the data for every suburb in Australia, over 15,000 suburbs. So we've been doing that for over 15 years. Um, but my view is you can't just rely on the data. The data can lead you astray. And there's a very important part of research, which is on the ground research. Go and have a look. And I'll give you an example of that. And our database, some years ago, was predicting a boom for two little towns in Tasmania. And they weren't actually towns in Tasmania. They were in King Island, which is in Bass Strait between Tasmania and the mainland. And these two towns called Kingscote and Grassy, one had a dramatic fall in the number of listings, that is, properties listed for sale. The other one had a massive increase in the number of sales. So we thought, what's causing that? There's no reason. This is a place that's a little rural sort of island, nothing happening. So we got on a plane and we flew to Melbourne, and then another tiny little plane off to King Island, about a six-seater, I think it was. It got there and had a look round. And the first thing we discovered in Kingscote, which is the main town, there were two real estate agencies and one had just shut down. What that meant was that the listings suddenly halved because people had to, then relist their properties with the other estate agent, and there was a lot of confusion. So as far as the official data went, it just suddenly, the listings halved. Then we went to Grassy, the other town, and there was nothing there. There was nobody living there at all. And we thought, what's going on here? And what it was that a major tertiary education institution in Victoria had decided to make Grassy their sort of off campus site, and they were buying every property they could at virtually hardly anything, and turning this town into a sort of a campus. So that was the reason for the sales. It had nothing to do with housing demand whatsoever. So when you go and have a look and you see, well, what's actually going on, I think that will either confirm or will say, no, this data is not right. Now, that's what we've done. We travel around Australia continuously. I've just come back from Tasmania, Victoria, later this week heading off to the Sunshine Coast and so on, because we look at what's actually going on the ground.
That's important, right? To pair it with data, to actually know what's creating the change. But I know in our discussion, John, you had mentioned that pre-market or off-market deals don't get reported on in the data metrics. So how does that impact on what people see out there with the numbers?
They do get reported in the sales results, but they don't show up. Obviously, if they're off market or pre-market, they don't appear in the listings at all because they're never listed. That can affect things like time on market, vendor discounting, all those numbers. They rely on listing properties and then sales occurring, and so you can look at time on market and all those sorts of things. So yeah, they do confuse the issue, especially when a lot of buyers agents are moving in, buying whatever they can get off market, pre-market, which suits real estate agents because they make their money a lot easier that way. And so it does tend to turn the data and skew the data in ways that are not helpful.
And since you started, John, you built your tool. Lots of other tools have popped up in the market. Could you talk us through like what people should follow, and like are we creating artificial booms because of what some of these tools are suggesting?
I think if the tools are any good, they should all give you the same answer. But that in a way is also a problem because they can actually then generate a boom in themselves. So AI is a good example. If you use any AI tool, and I've done this test, and say which Melbourne suburb is about to boom, you'll get the same answer, and that means that everyone using that tool will say, "Oh, this suburb's about to boom." And they might then decide to buy there and actually, create the boom that's being predicted. The other problem is that a lot of people are now seeing they can actually manipulate AI. And so what they do is they put in on the websites, they might be developers and they've got a particular area they want to promote. And so I talk up these areas, these are about to boom, and AI picks this up, not realizing that they're pseudo advertisements, and then says these areas are about to boom. But the only reason that it's making that prediction is because that's what the developers are putting into the matrix.
So, say these pockets may rise, like, and they may be artificially inflated because of AI or what people are reading on, what the output, say, Chat GPT is giving them. What implication would this have once these people or buyers, agents, or investors leave these markets? What would happen? Or what
What
could
happens?
happen?
Oh, yeah, sorry. What happens is if the boom has been created by speculative investors buying properties, and we've seen this time and time again, what it leads to is a crash in the market because it's not supported by genuine demand for accommodation. But we've had big mining boom 2008 to 2011 in cities and towns all around northern and central Queensland, and in WA, Port Hedland and Karratha, where property prices went from a couple of $100,000 up to over $1 million in a very short period of time. That was all caused by the mining boom, and then the prices went up by the fact that investors were just racing in and outbidding each other to try and get a property. And when that boom ended, and of course it was all based on speculative demand, property prices crashed. And in Moranbah, they went from $1 million, that was the median house price in 2012. Within a few years, it had dropped to 100,000. You can imagine that, the huge pain and anguish that would have caused investors buying at the peak and realizing that, 90% of their value and what they owed the bank was not recoverable. So that can happen, and it's not so frequent nowadays, but it's still possible. If you see a lot of investors running in, buying property, then it's not you. What you've got to do is check to see, well, is this supported by genuine demand for housing, or is it just simply speculative investors buying property?
And John, uh, property cycles, what's your view? Are they even real?
Well, they probably do exist in some form, but they're not useful because cycles can be long, short, they can be different. You might see at the moment we're looking at a boom in Darwin, moderating prices in Perth, Brisbane, Adelaide, and Melbourne's not in a boom yet, but could be. Every city's at a different stage of, if you call it a cycle, of the cycle. Therefore, when you look at one city, you will see this exactly the same things occurring. Some areas are booming and others aren't. So I don't like the use of the word cycle. I prefer to look at trends. And so, what are the main causes of housing market trend change? And let's track those. A good example, and I mentioned the three Ps, which is people, or population, purchasing power, and properties. And any one of those three, a change in them can cause a housing market boom or crash. For example, during COVID, there was no increase in our population whatsoever, but interest rates fell down to 2%. We had a dramatic fall in interest rates, which made property a lot more affordable, first-time buyers and upgraders, and there was a massive rush of people into the market. So that one change in that dynamic caused housing market booms all around Australia. And that's what can happen. At the moment, we've got the 5% deposit scheme, which is doing the same thing again. It's causing a massive influx of first-time buyers into the market. So when you look at cycles, you don't see those sorts of influences, which are far more important.
So, talking about then population growth, right? Like our population is rising, or we've had more immigration. Taking Sydney as an example, a very expensive city. Will it keep going forever? Or where does one draw a line?
That's a very good question. I think, it gets to be a bit ridiculous. Like, we live in Sydney and in the inner west, and I can see that for every house knocked down, they put another one up. But there's really, no benefit to anyone in doing that. Maybe the accommodation's a bit better, but there's a lot of infill development going on. And you think, well, surely, we can't keep on expanding our capital cities. They're much bigger than they probably should be. And yet everyone wants to live in our capital cities. We look at overseas migration. 80% of our population growth now comes from overseas arrivals, and they all want to live in the big cities. You can't blame them. That's where all the work is, and probably where their friends and family have already moved to. So that's where people come, and they obviously can't afford to buy, so they rent. So that pushes up rent demand. So it's something that our governments have to face, but they're not equipped to do that at all. So yes, I think that housing demand will continue to rise in the big cities, and as a result, prices and rents will continue to go up as well.
But what about, say, if we were to tie into borrowing capacity or what you call purchasing power? Would incomes keep up really with the fast paced growth in property markets?
At the moment, what we've seen with the first home guarantee scheme, which enables first home buyers to buy at 5% deposit. Now, the government said there's no caps on income. There's no caps on the number of people applying for this. So it's just open the doors. Everyone come in. Yes, you can buy. Now, they've also increased the caps. So that means in Sydney, the cap for which the 5% deposit scheme applies is 1.5 million. Now, at the moment, you can buy, as a first-time buyer, you can probably buy, a property in, say, Blacktown, Campbelltown, Penrith for between 700 to 1 million. The only limit on whether prices will keep going up is then, yes, the affordability, the capacity to make the repayments. So if they can do that, borrow the money, they will. And that means that there's a potential there for housing prices to keep going up, even in Sydney, until they reach that cap of 1.5 mil. And it's the same in Melbourne. The cap is 900,000. And there are many places where you can buy a first home for around 600. So they could go up, by 50% quite easily. And the same, every capital city, the caps are much higher than what first home buyer markets are currently asking people to pay. So there's a lot of capacity. If interest rates come down, which they probably will again next year, that again lifts the, that purchasing power. So yeah, there's no limit to it really.
Well, it's an interesting thing you raise, right? Like in Melbourne, some areas, 600K prices, and they can go up to the 900K mark, really, because of that first home guarantee threshold. And that's what I guess Sana and I were having a conversation the other day around Brisbane. The cap in Brisbane is $1 million, and the properties that were really, that people couldn't access, and now they're able to access. And I think they would cap out at 1 million, you would think, because beyond that point, people need to start, putting in larger deposits in Brisbane.
But then every house would be $1 million, and then it will push townhouses and apartments up. And people who are actually sitting on 900, 1 mil will be upgrading and pushing the higher price brackets as a result, just a domino effect.
Yeah, it moves in different ways. And we've seen that in Perth as a good example, where, say, 4 or 5 years ago, you could have bought a house in Mandurah or Rockingham for 300,000. They've more than doubled since. But for some first-time buyers, that is too big a price to pay. And so what they've started doing is buying units. So now we see the boom in the unit market in Perth, where you can still buy a unit for $500,000. So they're going to start increasing dramatically. But the people who have seen their house prices rise by $300,000, $400,000 in Perth, what they did was then decide to upgrade because the growth hadn't occurred in the dearer suburbs. And so you have this double movement of first-home buyers into units, townhouses, and owner-occupiers who have benefited from the increase in price, then decide to upgrade into bigger homes in more affluent suburbs. So it keeps going. And at Perth, it's still going, and Brisbane, Adelaide, exactly the same phenomenon is occurring.
And John, now the $1 million question for you. Do you think we'll ever have buyers markets ever again?
I can't see it because governments will always, conjure up some way of enabling people to buy a first home. It's a big thing in Australia. Owning your own home, it's an aspiration that not only people born here, but people coming from other countries. This is their ideal. We want our own home. So at the moment, the government's introduced the 5% deposit scheme. That's going to push up prices everywhere, and then it'll reach the caps, maybe a year or two from now, and it'll be even more affordable for the next generation of first-home buyers. So what do? And I think in the last election we saw the Liberal Party was proposing that people could use their super. Now, this is a brilliant idea. That unfortunately it was never progressed, but someone will pick up on this, that you could borrow not just against your super you've got, but against the super you will amass over your lifetime. So what that means is that superannuation funds will become like banks, and you can borrow money based on the amount of super you'll put in over your lifetime. And then, of course, you sell the property and you pay it back. So that way, again, it could be another impetus for prices to go up again. So there'll always be 50-year mortgages. That's another one that's been proposed. They'll come up with new ideas because everyone wants to live in the big cities and everyone wants to own their own home.
Well, the US recently, I think they released for first home buyers, I believe, 50-year mortgages. And I think we do have some lenders that offer 40-year mortgages. They obviously come at a dearer price, but it could push your budget out a little bit if there's an affordability issue.
Yeah, but we have a housing problem in this country, and obviously there's conflicts, right, between the different levels of government. What's your take? What needs to change?
Well, a lot really, because it's a bit of a dog's breakfast at the moment. You've got the federal government is really promoting overseas migration. And why is that? Because that keeps the economy in growth. They're all concerned about the economy. Whereas state governments, they want people to buy houses because they make a lot of money from stamp duty. So they're pro people buying houses when they do arrive here. But then the local governments are the opposite. They say, look, not in my backyard. We don't want more people coming in. It's already crowded. And so you've got these three levels of government at complete odds with themselves and each other. And the only way, when I travel to Europe, and I've been to places like Amsterdam and Constantinople and Copenhagen, where there are limits on the number of properties. So in other words, you can't build or develop new properties. And so if you want to, do that, they say do it somewhere else. These cities have reached their limit, and that's probably the sort of thing we're going to have to, deal with in future. So look, Sydney's big enough. We don't want any more development. Or Melbourne's big enough. Brisbane's big enough. But it's not happening. I drove through from Geelong to Melbourne, and there's massive new housing developments around Werribee, Tarneit, Hoppers Crossing, thousands of new homes being built, and the demand is there. So, it's something that I don't think our governments are capable of dealing with. And that means, of course, yes, prices will keep rising.
And what about regional?
Well, regional markets are, historically, and we studied the market right back to 1901 and earlier to see exactly how markets perform and why. And for this continual drift to the cities, it's always been the case, again, that capital city markets outperform regional markets. And the only time you find that is any different is if there's some special reason why people would want to go to regional markets to live. A good example of that is when older people decide to downsize and retire, and a lot of them say, well, look, I want to get away from the city and move to a nice coastal area not too far away from the capital city. So we get people in Brisbane who are downsizing, retiring, moving to places like Hervey Bay, which, very attractive, and you can see the price growth in Hervey Bay is really starting to take off. Or in WA, there's not many areas where retirees can move, coastal locations, because there's not a lot of bays or inlets, but those that are there are very, very popular. So you've got huge price growth occurring in Busselton, which is about 2 hours south of Perth. It's the same thing, people downsizing, retiring. So that's a special reason. That's why people, will actually want to move away in retirement. And it's not just because of the desirability of the area, but it's also because when they downsize, they can put up to $600,000 of their sale of the family home into super, so tax-free. So that sets them up financially for retirement as well. But you've got to look for a special reason for a regional market to boom. And if there isn't one, well, then it's not going to perform as well as you might expect.
John, now I'd like us to go anti-clockwise and look at each of the capital cities, maybe just quick sound bites on where the markets are heading, starting with Sydney.
Well, Sydney it's in growth again, and prices will continue to go up purely for the reason that more people want to live here. So it's going to be moderate growth. I don't see any sort of huge property market boom. And even though we've mentioned the $1.5 million cap for first-time buyers, very few first-time buyers will actually be able to afford that. So it's going to be a gradual move up rather than a dramatic increase in prices generally.
And Brisbane?
Brisbane is still in strong growth, and that will continue. One of the things about these cities, and we mentioned Brisbane, Adelaide, and Perth, is when you've had these sort of property market booms, they tend to generate economic booms as well, because 25% of our GDP comes from housing or housing-related purchases. So first-home buyers buy a property, they need to furnish it, they need to, sort of get carpets and curtains and everything, white goods. And so what happens is that the economy benefits from that. So Brisbane is a good example of where the economy is booming. And although it's now the second dearest city in which to buy property next to Sydney, it will continue to rise, but again at a moderate rate.
And Darwin, would you even buy there?
Well, I think Darwin just missed a bullet there with Cyclone Fina, which just sort of went north of Darwin, caused a bit of anguish to all the investors that have bought property there. I think you would take that as a warning lesson. Look, you're living or buying a property in a very, very small market, and about 120,000 people. It's very, very volatile because over 50% of the Darwin residents are renters, which is 30% in the rest of Australia. And the interstate migration is about 15% of the population. That is 15% move in or out of Darwin every year. That's huge compared to other cities. So it's highly volatile, highly risky. And if you're an investor who's bought in Darwin, I'd be, watching those critical trends and data points really closely.
How about Perth? Where is that going? And it's not stopping.
It's not stopping. Perth is now the third dearest city in which to buy a property, and many people would not have ever guessed that could happen. And again, there's an economic boom occurring largely as a result of the mining boom, mineral boom, but also the property market boom itself generates, an economic boom. So I can't see that stopping. It's all based on sound guidelines, people buying property because they want to live in Perth, or there's a rental demand, a huge rental shortage. So again, moderate growth to continue.
How about Adelaide? I guess a city that keeps rising.
Yeah, much to everyone's surprise. And Adelaide, although the growth is slowing, I think it's now the fifth most expensive city in which to buy. Canberra's still a little bit ahead. And the growth rate is slowing down. But again, there's no cause for concern because it's supported a lot by the economy. Adelaide's and South Australia's economy is quite strong. But you would expect that rate to probably, slow down. Adelaide's had a history of, long periods of time with no price growth at all. And I think it's probably going to get close to that.
So you see it slowing down or maybe even becoming a buyer's market?
Possibly, yeah. But very, low price growth, if any, over the next few years.
How about Melbourne? Everyone's talking about it at the moment.
Yeah, it's a real problem child of the property market, isn't it? I mean, it should be doing well. But when you look at Melbourne's property prices, haven't gone anywhere in 5 years. They're still back where they were 5 years ago. They went up during COVID, back down again. The government's got massive problems with its huge COVID debt. And then in order to repay that, they've increased land tax and payroll tax and introduced all sorts of savage taxes on investors like short-term rental and absentee landlord tax. If you leave your property vacant, you get a tax on that. Short-term rental tax. So, there's just all these impositions. And now the properties that we own, we've just been advised by our real estate agents that there's all these new restrictions have come into force, which mean that you can't evict your tenant even at the end of a lease. You can't increase the rent beyond a certain amount. There's all these new restrictions that have just come into force, which tend to deter investors. So it's a bit of a problem. It should be booming. It's not. And you've got the sixth lowest prices in Australia, where you can buy a first home in Melbourne for 600,000. You can buy a unit in beautiful places like Brunswick for around 400,000. Dandenong 400,000. So it should be doing very, very well. I think it'll get over this. I think that next year there'll be a change of government, very likely, and a more positive attitude towards investors, because they do provide the accommodation that people need in Melbourne. So I think it's overdue for a change, and we can already see that starting to occur in the lower priced areas.
Well, it does feel really good value for money at the moment.
Well, it is. I mean, it's extraordinary value. And when you look at places like the Mornington Peninsula, because of this the land tax, which now applies to any second property, means that a lot of people who have had holiday homes in the Mornington Peninsula for generations are suddenly finding they've got to pay this, savage land tax on a property they've had in Sorrento or Portsea or Blairgowrie. Been in the family for years. That's where they go for Christmas and so on. And now suddenly they've got to pay this massive land tax, and so they're selling them. And so when you look at property prices in those locations, they've dropped by 20, 30% over the last few years, down to, in some areas, 800,000 for properties that years ago were worth 1.2 mil. Bargains. I mean, these areas will recover, and but not for a few years. It's going to take, a bit of time, and also a change in those laws, because they're very regressive, anti-second sort of owning a second house in Victoria.
But do you see this land tax going with the government changing? Because the paperwork says the land tax and COVID levy are here to stay for maybe at least the next 7 years.
I think if you look at the difference between Western Australia and Victoria, so Western Australia's got a massive housing shortage. They have short-term rentals. So what do? They say, if you've got a short-term rental, we will pay you money to change to long-term, in other words, a year lease or whatever. So they're rewarding people who say, right, we don't want short-term to provide short-term rental accommodation. We're going to provide long-term instead. So they're rewarding, using the carrot rather than the stick. They need more properties. More properties need to be developed. They've just started a scheme where they will give you up to 1/3 of the cost of a development interest-free. So the government will provide the money to enable you to develop new properties. Again, carrot, not the stick. In Victoria, it's the other way around. They're punishing people for investing in property. So, yes, I think it'll change, and it has to, because the only way that Victoria can get itself out of this economic malaise is to encourage more property transactions, get the money from stamp duty, and that will help the economy to grow and for property market to boom.
And as you shared earlier, right? When there's people buying property, they need white goods or they might need tradespeople. So the whole city, or like Brisbane, right? Like the whole city benefits from that. And if they don't change some of these regulations and investors don't come back in, then they'll keep struggling for a very long time.
That's right. They won't be able to repay that debt. $65 billion. It's a lot of money, and they're not getting anywhere with it, because it's all. If you increase payroll tax, well, then less people will be employed. It just doesn't make sense. But it's very hard to use a carrot when you haven't got much of a carrot to offer. So, that's something they have to deal with. But yes, it does flow into all parts of the economy, and a quarter of economic growth is in some way reliant on housing and people buying property. As you mentioned, white goods, furniture, all sorts of things, even, to the point of, say, putting up fences and landscaping and all of that. So that sort of approach, really, when people start buying houses, it means that the whole economy starts to grow as a result.
In
Hobart.
and Hobart, actually, we missed Hobart, the last one.
Yeah, that's the one everyone forgets about, isn't it? It's not very big, is it? I mean, there's only 500,000 people in the whole of Tasmania, 200,000 in Hobart, 100,000 in Launceston. We just spent 2 weeks driving around, having a good look at the market in Tasmania, and it's sort of what I think of the big cities like Hobart and Launceston, like sponge cities. It's where people leave country areas and move to the city. So there's good potential there. But there's something else happening in Tasmania, which is an increase in overseas migration. And they haven't had that for a long time. So I had a look to see, well, where are these people coming from? Why would overseas arrivals, they tend to favour Melbourne, Sydney, even, places like Adelaide, Brisbane over Tasmania. And most of these people are now coming from areas like Nepal, Bhutan, Afghanistan, which are cold climate areas and mountainous areas and they feel more at home when they're surrounded by mountains, covered in snow and so on, and not too comfortable in the heat. So it's the perfect climate. And what we saw too is these people are being afforded a massive welcome because they're so badly needed. Doctors, lawyers, nurses, all these people that Tasmania's got a tremendous shortage of. So that's all a positive for the property market. And the other thing is that although there's an interstate drain with young people leaving for the mainland every year and older people coming in, but the thing about young people leaving is that they tend to leave the family home. So your kids are leaving home and they head off to Melbourne or Sydney. They're not creating an empty property, just an empty room. Whereas the older people coming in, cashed up, they're ready to buy a property, which they need to do straight away. So that means the interstate drain, which again with data is confusing, isn't it? Because you would say it's actually a negative drain, but it doesn't affect the property market in a negative way because the people leaving are not creating vacancies. The people arriving actually want to buy property. So we can, and it's second most affordable city to buy property. You can buy a 3-bedroom house in Hobart, 600,000, Launceston, 500,000, Devonport, 400,000. These are very, very affordable areas, and investors haven't really, and the buyers agents haven't really discovered Tasmania yet. But I think it's on the cusp, maybe not of a boom, but certainly strong price growth. It could be our best performer next year. So that's a tip you've heard from me first on the Property Addicts that Tasmania is one to have a really good look at.
And John, moving on to the mistakes that you see investors make, what are people doing wrong?
Probably the main thing they're doing wrong is the people buy with their their heart instead of their head. A lot of people, fall in love with the property and say, "Oh, this is great. We can retire here or whatever." And they don't look at the data; they just look at the property they've fallen in love with. So that's probably the biggest mistake is the wrong type of property. And then the second one would be buying at the wrong time. That people buy in an area there's been a huge boom going on. And yes, you could buy in Perth, Adelaide, or Brisbane and probably see property prices continuing to go up, but they will reach a ceiling and then they'll stop. And some areas could be closer to that than others. And that's the worst thing you can do is to buy at the peak of a boom. Much better off, buying in places like Tassie where you're at the bottom of a trough and they can only really go one way now, and that's up. So I think they're the two biggest mistakes: wrong type of property, wrong time. And timing, as I said, is very, very important. It can make or break you if you do it right. It's a great rewarder, but if you get timing wrong, it can be very punishing.
Oh, it's a bit like some people who bought property in Melbourne during COVID, and we've had people say to us that they regretted actually doing that because their property actually went backwards rather than.
But
Yeah.
but they wouldn't have known though, right? What's to come with the tax, land tax, and the levy.
Um, No, I don't think you could have predicted that the way it panned out. But you could see that what was happening in Melbourne was unique in that it was the most lockdown city in the whole world, during COVID. And there were going to be ramifications for that. You can't do that to a city and an economy and expect to walk out the other side unscathed. And it's no coincidence, I think, that now WA and Queensland, which virtually had no lockdowns, they just closed their borders and said that's it, are the best performing economies right now. So I think there's a legacy from COVID that Victoria is suffering from.
And John, you touched on the right type of property. So when Mona and I we are choosing assets for clients and in our own portfolio, we're not just looking at, where the markets might boom, but what we are also looking at is, would this property sell even in a dead market? Like if I had to offload this asset, would it still sell? Because, is it the right property for that market, or is it?
The quality of the asset and it having good resale value longer term.
Yeah, it's very important. When you look at property markets when they boom, even the worst properties will go up in value, but they're always the last ones to go up. and then they're the first ones to come back down. So when a boom ends, it's those, properties that are not typical, too big, too small, needing work, whatever. They're the ones, or in bad positions, bad locations, they're the ones that will go down first. So when you notice that happening, you say, all right, it's time to get out of this market. If you've bought a good quality property in the right area and a typical property for that area, then you've got plenty of time to sell, even in a dead market.
And John, you touched on your database that you've built. So we're curious, how accurate have your predictions been?
Well, very accurate, because we've been doing this since 2011. So as I said, that's virtually 15 years. Over the years, our database has predicted with 90% or over 90% accuracy, not just in the terms of the direction, but also the intensity of price and rent changes. So we've got a remarkable record of predictive accuracy. We've got thousands of people. We sell reports, for both short-term and long-term investors, and for cash flow and so on. So we've got thousands of people out there who've bought our reports and done very well as a result. But one of the other things that the database enables me to do is sort of a top-down approach, where I can look at a capital city and see, well, overall, which way is the data moving? And I did this back in 2016. I looked at Hobart and I said, gee, it's reached that tipping point where the demand is now greater than the supply, and it's about to boom. And I made that prediction publicly. It was published in Property Observer and a few other journals and property media sites. And people laughed. They said, well, that's ridiculous. Hobart's done nothing for 10 years. It's not going to boom. It did. It was the best performer in all of Australia's capital cities over the next 5 years. I've been able to predict the Perth boom before it started, Adelaide and Brisbane and so on. So it's enabled me to look clever, but I'm not really. I'm just using the database to do all the hard work, and yet make these predictions publicly. Like the other day, I just publicly predicted that Tasmania was set for a boom, and I'm happy to make that public because I have every confidence that that's what's about to happen.
And John, I know you are going to let us in on your next secret location for 2026. So we'd love to hear more about it from you. And I know you've got some slides to share as well on it.
I do, and I'll get those up now by sharing the screen. All right, so this is my secret prediction for the property addicts, and I should point out that I don't make predictions for small areas to large groups of people, hundreds of thousands. When I did with Australian Property Investor magazine, I was very careful not to do that, because you can actually change the market. You can make a boom simply by predicting one, if enough people run off and buy property. And that's not what I want. And that's the reason I've done this just for you guys, the property addicts, because I know there's a lot of you there, but you probably won't all be wanting to race off and buy property in this location. But what it does show you is the value of doing the on-the-ground research. So like the database said, this area is about to boom. So we went and had a look to see, well, what's actually going on? Why is that the case? What have we got? We've got this city in South Australia called Port Augusta. It's located, you can see it here, it's about a few hours drive northwest of Adelaide. Now, what's unique about Port Augusta is the fact that it was the site of South Australia's biggest coal-fired power station. That's it there. It's in ruins, no longer being used. South Australia decided to move away from coal-fired energy production some time ago, and they needed to come up with an alternative. The problem with that is that when you look there at Port Augusta, it's the centre of the South Australian electricity transmission grid. That sends electricity all around South Australia, especially to Adelaide. So the grid is centred on Port Augusta, and it's more expensive to move the grid than it is even to build new power stations, which is a bit why during the last election the Liberals said we're putting in all these power stations. I think they were nuclear, but they picked areas where the grid was centred. In other words, where the old power stations were. See, it's very, very expensive to move the transmission grids. So that meant that Port Augusta needed to be the centre of whatever was going to replace this coal-fired power station. So they built a massive hybrid power generation plant. So a number of stages. It was both wind and solar powered, and they constructed this over several stages. This is what happened to Port Augusta's house prices. When they started, the median house price in Port Augusta was $140,000. 4 years later, when they finished, it had doubled. So what happened was that house prices in Port Augusta doubled in just 4 years. And while all that construction work was going on, because of the huge rent demand the work had created, there was positive cash flow all through that period. So that was a tremendous result for investors if you'd bought at that time. But what we looked at, well, what is going to happen next? And that is that now they need to ensure the consistency of South Australia's electricity supply, because solar and wind have certain problems. Like the sun doesn't shine all the time, the wind doesn't blow all the time. You need to store the electricity. So they're about to build this huge, what they call a BESS, which is a battery energy storage system near Port Augusta. That means that all the energy will be stored and then released when it's needed, and that will secure, hopefully, South Australia's continuous electricity supply. There won't be any blackouts or brownouts in South Australia, and there have been in the past. This project will require huge numbers of people to work on it, and it will also enable further development as well. So there's going to be other projects around Port Augusta which will rely on this, secure source of electricity. So what could happen to housing prices as this construction starts? At the moment, it's 280. Over the next 4 years, it could double again. So that's my prediction, is prices in Port Augusta could double again in the next 4 years. And doubling in 4 years is not a bad result for property investing, especially if you're getting positive cash flow. The cash flow is still over 6%, and that means that the property is paying for itself while it's doubling in value. So that's my secret little tip for you guys.
Thanks, John, for sharing. I mean, how many places can you buy a 280K house in all of Australia? So that's very valuable to us and our audience here. And John, to wrap up, what would be your hot tips for 2026 for our audience?
The hot tips, well, I think I've mentioned, we have sort of covered first-time buyer markets. They're going to go up dramatically in most areas. The problem is that all the speculative investors are moving in. It's getting, even now in Melbourne, getting very difficult to buy. So you sort of move ahead of the trend a little bit. In Melbourne, I'd be looking at units right now because they're extremely affordable. The rent yields are much better than houses. So I think, inner Melbourne units, Brunswick, I mentioned 400,000, all of those inner urban areas, they're well serviced, very popular with renters. So I think at Melbourne units, especially the inner unit markets, and also I'd look at Tasmania as being my other hot tip. I think when you look at Tasmania, you ignore the sort of hinterland areas and look at the big cities, Hobart, Launceston, and Devonport, and maybe Ulverston, which is the 5th largest city. And that's about it. They're the ones that have got the most potential. Again, rental yields are really good. There's a huge rental shortage, and that would be my tip. I'm sure if you would buy in those areas, you've got the potential to do very, very well.
Thanks, John. And John, how can our audience reach you and benefit from what you share so generously today and in your writings?
I think, the best way to find out more about what we do is we've got a free newsletter and a website, Lindeman Reports, Lindeman Reports, that's .com.au. Go to that website and you'll find out all of those blogs and information about the property market. If you want to buy our reports, there's more information about them there as well. But you can also subscribe to our newsletter there. And then if you have any questions, you can send me a contact us on that site with any question, as long as properly related. I won't answer about what you should buy your wife or husband for their birthday or Christmas, I will answer property-related questions only. But happy to do that.
Yeah, and John, in the current property market, when there's so much noise, it's such a relief and a breath of fresh air to speak with someone who knows and understands grassroots property and just getting deals done than getting lost in the noise. So really appreciate your time today. Thank you so much, John, for joining us at Property Addicts Australia.
It's been a pleasure. All the best, everyone.
Thank you.